So that could be a factor that has seen a little more stability in the last day in particular. So at the close of the US markets, we've got the Dow up by about 1%, the S&P 500 up by 0.5%, and the Nasdaq up by 2.3%. It must be said, though, that they did come off their late gains with a decent clip. So that's why I'm saying to keep an eye on the US futures in after-hours trade. European markets finished with some decent gains as well. Probably more noteworthy were some of those countries where the coronavirus has been most active, such as Italy. So the MIB is up, closed up by about 2%. The FTSE in London up 1.5%. The German DAX up 2%. So encouraging news there. And probably equally, the move higher in interest rates for the 10-year Treasury note, it's trading at around 1.2%, a little bit below that at the moment. So that is good news as well. It's an indication that you're not seeing that terror trade on as investors crowd into safe havens. It can also be not such a big positive at the moment when you see those yields move higher. That indicates that people are just hoarding cash as well. So that's why central bank action in these overnight market windows are so important, to make sure that there's enough dollars to lubricate the economy. There's actually been a bit of a shortage of US dollars lately, so that's been part of the reason why we've seen that move higher as far as the treasuries are concerned. So today, as far as the economic news is concerned overnight, some important lines in the sand. Yesterday we saw better than expected employment numbers locally, but they were looked through essentially, given that they are now a very antiquated set of numbers. Overnight we had the Philadelphia Federal Reserve release its measure of manufacturing activity. That was at an 8-year low, reflecting the beginning of the coronavirus impact. German business confidence, very much reflecting the current situation. So it's at a 10.5-year low. So that will be an important barometer moving further into the pandemic time. And then jobless claims in the US hit a 2.5-year high. So if there are numbers that you want to pay particularly close attention to in the near term, it's going to be about the rate of joblessness. The degree to which economies get shut down will be directly affecting the number of people out of work, and that will also flow on to the perceptions of the market, and then as a result prices. So keep an eye on that. On the local front, as I said, a solid improvement is expected at the open. The Aussie dollar has been under the pump. The quantitative easing initiatives announced by the Reserve Bank yesterday, so important in terms of being a starting point for building confidence in these markets again, but that's going to be a big headwind for the Aussie dollar. So it has been down towards 55 US cents. It's rebounded now. It's north of 57, but just expect that to be as volatile as the equity markets in the near term.